Remember the Bitcoin price jumps that happened in 2012, 2016, and 2020? History suggests that a similar explosion is coming in the next halving event. In this video, we'll crack open the vault of Bitcoin knowledge and explore the upcoming halving event in detail. We're gonna answer the following questions. What exactly is the Bitcoin halving event and why is it so significant? How can it impact the price of Bitcoin and what can we learn from past halving events? And what should you expect in the lead up to the halving event and further beyond? Whether you're a seasoned Bitcoin investor or just starting out on your crypto journey, this video will equip you with the knowledge you need to navigate the exciting times ahead. Understanding Bitcoin scarcity. Imagine stepping into a vast digital gold mine. That's essentially what Bitcoin is. It's a revolutionary system for creating and storing digital gold. But unlike traditional mining with endless resources, Bitcoin has a crucial twist. There's a limited supply. Only 21 million Bitcoin will ever exist. To keep track of this creation process, Bitcoin utilizes a groundbreaking technology called the blockchain. This secure and transparent ledger records every single transaction, ensuring the authenticity and scarcity of Bitcoin. Now here's where the halving comes in. Roughly every 4 years, a pre-programmed event cuts the reward for mining a new block of Bitcoin in half. Think of miners as the security guards of the Bitcoin network. They are verifying transactions and adding new blocks to the blockchain. With the halving, these guards get paid less for the work, but that's actually a good thing. Why does the halving matter? The halving plays a critical role in Bitcoin's future for two main reasons: scarcity and security. Scarcity is like the magic ingredient in any valuable resource. By reducing the rate at which Bitcoins are created, the halving makes Bitcoin even scarcer. Remember, there's a finite supply, so with fewer coins entering circulation, each Bitcoin becomes more valuable in theory. Think of it sort of like a rare diamond. The limited availability is what drives the price up. The halving also strengthens the security of the Bitcoin network. Miners are incentivized by block rewards. With the halving making network security twice as expensive, it becomes harder for less efficient miners to participate. This keeps the network healthy and secure in the long run, protecting your precious Bitcoins. Bitcoin's rarity surpasses gold. Here's where things get exciting. After the halving event, Bitcoin's stock to flow ratio, a measure of scarcity compared to production, is projected to actually surpass that of gold. This means Bitcoin could become even more rare than the precious metal, potentially leading to a significant impact on its value. Bitcoin's story isn't just about scarcity, it's also about demand. There's a growing interest in Bitcoin, not just from individual investors, but also from institutional investors like major financial firms and ETF issuers. This demand is already exceeding the limited supply of new Bitcoin coming into the circulation, creating a potential shortage that could further drive up the price. While the impact of the halving on the price is still up for debate, the past offers some fascinating insights. We've already had 3 halving events, one on November 2012, July 2016, and May of 2020. Following the halving, the Bitcoin market typically enters a period of significant price appreciation, fueled by the reduced supply and increased demand. Eventually, the market reaches a peak and enters a correction phase where prices decline. This is a natural market cycle that shouldn't be cause for panic. After the bear market, the price might stabilize and trade sideways for some time. This consolidation period allows the market to regroup before the next potential surge. Interestingly, the period around 2019 is believed to be the mark of the bottoming out process of the previous cycle. This could signal a potential parabolic price continuation in the future, similar to the dramatic price increase seen after the previous halving. However, it's important to remember that cryptocurrency markets are inherently volatile, and past performance doesn't guarantee future results. So what should you expect in the halving coming on April 20th of 2024? Well, here's a breakdown of what might unfold. Pre-halving retraces. A temporary price drop is a common occurrence before the halving event. This could be a strategic buying opportunity for investors who believe in Bitcoin's long-term potential. This might play out again in the lead up to the halving. Prices could rise based on anticipation and then potentially experience a correction once the event actually happens. Stay informed and avoid making impulsive decisions based on market noise. The road to Bitcoin's potential price explosion isn't necessarily smooth. Here's what you might encounter. Reaccumulation. This is the current phase where the market accumulates capital for the potential price surge. It could last several months with prices potentially remaining stable or showing modest growth. This is a time for investors to be patient and focus on building a sound investment strategy. After the reaccumulation phase, the price might trade sideways for some time, consolidating before the next major move. This consolidation allows for a healthy market correction and can be an indicator for a strong support level forming. Now this is where things get exciting. Several months after the halving, the market is expected to go on a parabolic growth phase. This is where the prices could potentially skyrocket, driven by the combination of forces such as scarcity, increasing demand, and the renewed bull market. The Bitcoin halving is a significant event with potential to push prices upwards. While the exact timeline and scale are uncertain, history suggests exciting times ahead for Bitcoin. Here are some key takeaways. The halving creates scarcity, potentially driving up Bitcoin's value. Post-halving events were followed by significant price increases, and the current cycle might follow a similar pattern of reaccumulation, consolidation, and then a parabolic price surge. The halving is a catalyst, but Bitcoin's true potential goes beyond the price surges, and here's why. Similar to gold, Bitcoin offers protection against inflation. Its limited supply makes it a valuable asset in times of economic uncertainty. Bitcoin is the foundation for a revolutionary financial system called DeFi. This emerging technology allows for secure and transparent financial transactions without intermediaries potentially disrupting traditional finance. Bitcoin is challenging the status quo of traditional finance systems. Its increasing adoption as a mainstream form of payment could revolutionize the global economy. Major companies such as Starbucks and Overstock.com already accept Bitcoin payments, and this trend is likely to continue. Travel agencies or booking platforms might offer Bitcoin as a payment option, providing greater flexibility and potentially lowering transaction fees. Bitcoin transactions are fast, secure, and borderless. They could become a more efficient and affordable way to send money overseas compared to traditional methods. The bottom line is Bitcoin's future is bright. The upcoming halving is a significant event for Bitcoin. It reinforces scarcity, strengthens security, and has the potential to push prices upwards for the long run. While short-term volatility is likely, Bitcoin's potential to become a valuable digital asset and disrupt traditional financial systems remains strong. In our previous video, we dive into the details of Chipotle's upcoming 50-to-1 stock split. Head over there and check it out if you're curious to see how it could impact your investment strategy. Thanks for joining us. If you enjoyed the video, leave a thumbs up and subscribe for more. Let us know your thoughts about the halving in the comments below. We'd love to hear from you.